Are you paying more GST on your purchases and charging less on your sales and then waiting for months to get that refund? Budget 2026 may finally fix this biggest GST pain point. So what happened nowadays is many business faces the inverted duty structure, means you buy the raw materials at 18% GST, but your finished goods, they are charged at 5% GST. What happens is your working capital suffers, your input tax credit keeps piling up and your refund gets stuck. And the government plans to allow 90% of this refund in the IDS cases too. So basically, instead of waiting endlessly for full verification, you will get 90% of the refund quickly, just like the exporters already do. So CBIC has already given the instructions in November 2025, and if this is proposed in the budget 2026, it may provide the legal moral support for it. The next biggest issue in the cases of applying refunds in the cases of inverted duty structure is that it is allowed only on the input goods. But what about your plant and machinery, your fixed assets, your professional and technical services? These are charged at 18% GST. So your credit just sits there blocked. And after the GST rate changes, many of the products have moved to 5% category, but the services and the capital goods are still taxed higher. So this hits the manufacturers, the MSMEs, the capital intensive projects, the new projects coming up. And the government is considering expanding the IDS refunds to include the input services and possibly capital goods. And if this happens, it will be a major GST structural relief and not just an amendment. To sum up, Budget 2026 could finally improve cash flows for businesses stuck in the refund. Faster refunds and wider coverage will help businesses to achieve more liquidity. If you are facing GST refund issues, this is something you should definitely track. Follow for more such updates.